Hey everybody, welcome to the daily update for Wednesday, January 14th, 2025. I had to look over here because I have this new calendar, this new desktop calendar. It's a book a day desktop calendar, which will remind me what day it is. Anyway, did I say happy hump day? Happy hump day. So I haven't said this or done this for a long time. So let me say it and do it now. As I pull it up over here so that I can put it on the screen. Hey, let's get Gangrene out of there. Great Boston punk skate band. If you are not in the trading room and you are a paid Lund Loop subscriber, you are not getting the most out of your Lund Loop subscription. So get in there. Super easy. It's super fun. Lots of traders, investors, all different styles. And even if you're not there during the day for every tick, you can come back, like here's what you do. End of the day, after dinner, you put the kids to bed, whatever, sit down with a, glass of Chardonnay, some fine grain alcohol, and you can just scroll back through the day, right? You can just see what was happening during the day. What was the tone? What was the tenor? What were the hot tickers? What catches your eye? The whole thing about the trading room is it's idea generation and thesis reinforcement. So you're maybe going to catch something there that you didn't know, like a ticker. You're like, oh, I didn't know that ticker. I wasn't watching it because someone else posts a chart. Or maybe you've got a thesis on something and you post, hey, this looks like it's going to break out. It's got a target here. Someone else is like, you know what? I think that's 100%. I was thinking the same thing. Or you see someone post a chart that you're interested in, I feel like I'm rambling here, but the point is it's a great community. Get in there. And if you're not a paid Lund Loop subscriber, become one. And then you can one click of the button. You're right there in the trading room. All right, let's get the trading room out of here. Let's go to the action, as they say. So, all right. So here's a look at the futures. I think we've got some things popping after hours, right? What do we have popping after hours? Let's see. I think I posted it in the trading room, didn't I? We've got, I did it for Wednesday. Anyway, we might see the futures move here. We may not. But so look at this. Look at the last 30 minutes of the day. That ramp really changed the tone and tenor. I have the wrong glasses on. Hang on for a second. I went out of my way this year to get blue light glasses. Better for my eyes, and I keep forgetting to wear them. So we have this last 30-minute ramp here, which really changed the look of the daily charts on the indexes. We also see how it corresponds with this pullback from the highs. We're stair-stepping higher here on the VIX, and then we get kind of this, not a huge crush, but we get knocked back down a little bit. So I'm not usually a fan of that, like when the last 30 minutes changes how a chart looks. But what I want to do today is I want to go through for everybody, even free subscribers. I want to go through the indexes, and then I want to show you the ETFs and other metrics that I use to try and figure out what the indexes are telling us. Because we can look at the indexes by themselves, and sometimes you get a picture of what's happening. Sometimes it's a little more ambiguous. Sometimes it conflicts with some of the stocks on the watch list. And by going through some of the ETFs and some of the other indicators, that can sometimes give you a clue as to which way we're leaning short term. So let's start. There's that spike. You can see that spike there. Otherwise, it was pretty much, we had this. Let's do this review real quick. So we drop at the open. All the bears are crowing. Then, of course, buyers show up like they tend to do after the first hour or so. Rocket it back up almost to even, and then we lose it. And this is that part where we were going below the lowest parts of the day on the closing basis, right? So we hold here, and now we're like, uh-oh, that's not really good. And then, boom, buyers come in and drive it right back up. So let's see where that leaves us on the indexes. All right, so the first thing I'm going to say here, if you're a longtime Lund Loop subscriber, you know what I'm going to say. You're probably tired of hearing it unless you're a bull. And that is, there is nothing technically wrong with this market. It looks fantastic. I mean, I love the fact that it went down and it tagged the 8 to the penny. and then buyers stepped in. We are above the 8 EMA. We are above the 21 EMA. We are above the 50 EMA, and of course, we are way above the 200 EMA. So we're above all four exponential moving averages: the ultra short, the intermediate, and the long term. We are above the all-time high VWAP, which is just set on Friday. We closed in the upper range of this bar. I can't find anything wrong here. Had a little bit higher volume on this slightly down day, but come on, that's being very pedantic. So nothing wrong with the SPX. Qs, nothing wrong with the Qs. Qs are above every moving average again. They're above this minor pivot area here, and they are just below this a little bit more major pivot. Basing right here. Keep knocking on the doors. Once, twice, 3, 4 times. Every time we knock on that door, sellers get weakened, which gives us a better chance that we're going to break through here. The other thing is, you don't want to break through a pivot level starting down here. Like on this day where we started here and went all the way, by the time you're up here, the buying power is usually, it's already exhausted for the day. And so that's why sellers can knock it back down. Same thing here, starting all the way down here. Now we're starting to, we're getting closer to that level. You want that, that explosion to be closer to the area you're trying to bust through, because it gives you a better chance that you're going to get through it cleanly. So again, nothing wrong here with the Qs. If we look at IWM, same thing, above the VWAP, above all the moving averages. I mean, look, here's what you could say about IWM. It's fairly extended from the 8, so it could come back down into this area and be a totally normal pullback. And then finally, we've got the Dow, which this does look a little bit toppier in the short term. Like maybe it's going to need some more time, because that's a pretty big bar, which did engulf the whole bar from yesterday. But when you move above the close and then you give it all back and you come in pretty aggressively, that's not great. But again, we're not even down 1% today, and we're not even below the 8. So I would say the Dow right now is the weakest link in the short term, but I can't find much to complain about. That could all change tomorrow, but the way it looks right now, it is what it is. So now what we do is we go through the indexes and ETFs. It gives a little bit of an idea of maybe, we're kind of on the fence here with the indexes short term. Long term, there's nothing to worry about, or intermediate term. But short term, are we going to have a little bit of risk off? So we look at the VIX first. And look, when the VIX was up here, that was not too great, because what we had running into this was a rising wedge, which is really a bearish pattern. And it broke below this rising wedge like we expected it to, but then the next day went right up into it. And sometimes when you get false breakdowns or false breakouts, you get very fast moves in the opposite direction. So if this is the false breakdown and it fails and we come back up into here, there's a chance that we could really come up here fast. And it looked like we were going to do that. Oh, the VIX has just popped a little bit. I wonder if something happened on the... it looked like we were going to do that, but then we got that sell-off at the end of the day. So was that it? Is that all the VIX has? Is it going to be rejected here at the 50 and roll back over? We don't know yet. So that's kind of a neutral. TLT, still in this range ever since stair-stepping down from here along this intermediate term trend line below the 50. Then it found a base in this area, and it has not figured out yet what it wants to do. It kind of looks like it's ready to curve back out of it, but still somewhat ambiguous. Dixie yesterday came in a little bit and had been taking pressure off of risk assets as it was going like this. This kind of works against that idea. And now we're back up at the top of that. So that's a little bit more, I would put that in the camp of, okay, that might be a little bit more short-term pressure on the market. Bitcoin, however, doesn't seem to care. Now, this is really interesting, because when the market was rallying, Bitcoin was doing nothing, especially in this area. Are we getting a reverse now? Are we going to see crypto go while the market pulls back? I don't know, but this is definitely bullish for Bitcoin. And if we can break above this area, and especially if we can break above the all-time high VWAP, that would be great. So green shoots there. XHB, that looks good. I mean, that rocket move off of this level here, and now breaking this little pivot. There's nothing wrong there, except that it's extended from the 8 quite a bit. So, probably has to rest at some point. But that doesn't look bearish. SMH, all-time highs, but little bit of a potential reversal. So what does that mean? If we get a close below today's low, that's a reversal bar. Does that mean we immediately go down to 0? No, it just means we may need to pull back to the 8. We may need to fill in this area a little bit more. XBI actually looks pretty good here. So here's where we had the false breakdown on XBI. It had been holding on this rising trend line here. It broke down, came back in, and boom, there's that fast move in the opposite direction. Now we've consolidated here, and this is a spot where it really needs to get going and should get going. Like there. What else do we have? Let's see. XLF. So this is worrisome. I would say this is worrisome. We've had the pressure on the banks because of the supposed thing Trump wants to do about capping credit card rates, which nobody thinks can ever actually happen in the real world. But this is a pretty big follow-through bar here after this gap down. And you don't want to see this sort of action in the financials. You really don't. And now we're all the way at the 50. So I would put that in the short-term bearish camp. Definitely. Carry, not so much, holding up a little bit better. But this could be a potential canary in the coal mine short-term. Oil, okay, that's another one, right? Starting to break out finally after being hemmed in by this intermediate term downtrend. That probably puts us a little bit more in the bearish camp for equities. XLE and OIH are kind of confirming that move. What else do we have? Gold, taking the day off here. Gold miners, not taking the day off. And silver, higher, but a pretty aggressive reversal here, this waterfall. So that, again, maybe time for silver to revisit the 8-day. And then finally, pot looked like it was starting to reverse yesterday and maybe make this U-turn. It got smacked down by this recent VWAP from that rescheduling day. Pot really needs to break above this quick, or it's in danger of coming back down into this area. So I would say all in all, a lot of neutrality in these under the hood things, except for XLF. That one does bother me a little bit. That bothers me a little bit. So we're going to have to watch a little bit closer. And what does that mean? What does it mean? It means we're just trying to figure out where we are in that scale from risk off, 0, to risk on, right? Risk off means fewer trades because we're being more selective, shorter time frames to reduce risk, obviously, and also smaller position size, right? So you're not going to take overnight trades as much or weekend trades because that's overnight risk. You're bringing down your position size. All these things are meant to be a little bit more defensive. Risk on is the opposite of that. You're taking more trades because the market is more forgiving. You've got a tailwind. You're not worried about swinging things or taking them and holding them for a few days or a few weeks, and you're pushing your position size. So where are we right now? Hard to say. I'd say we're like at a 6-7, 6-7, where we could really go either way. If we have a red day tomorrow, we probably want to pull it in a bit. A lot of names are just on the precipice. We're going to go through them in a minute. And so this is where it kind of, you're going through a filter system. You're looking at, okay, here's what the markets are doing. And they're kind of ambiguous. They're not really giving us a signal. Then we look under the hood at the ETFs and the indexes. They're giving us maybe a little bit of a hint that we want to be on our guard. And then we're looking at the individual names, right? We're not looking at subpar setups because with those two other factors in there, those aren't the ones you want to be in. You want to be in the best setup. So it's kind of a filtration. I don't know if it's top down or bottom up, whatever they call it, but it's a process. It's a process of elimination. So, all right, let's go through the red list to see what's joining our green and orange list, and we'll go through the whole thing.